being with us on CNBC-TV18. By the way, K-Fintech, the IPO, there's a listing today, so that happens in, I think, about a couple of minutes from now. We'll keep tracking that one closely. It's a pure OFS, so nothing goes to the company, but nevertheless, we'll track that one closely for you. For the market, still down almost about 100-odd points. The mid-cap index is down 250 points, so it's taking a bigger brunt. And there are big losers in the banking space. Punjab National Bank, HDFC Bank, Kotak are all your big losers at the moment. But the logistics space is in focus after Nirmal Bang note put out where they said that they have an optimistic view. The government is looking to lower costs from the sector to 8 to 10% of GDP from the current 13 to 14%. To discuss that, we are joined by key player Rampraveen Swaminathan, the MD and CEO of Mahindra Logistics, joins us now. Mr. Swaminathan, thanks a lot for joining in. First, if you can just start by telling us, what do you think the prudent way is to lower costs for the industry? The government aims to reduce it to 8 to 10% of GDP. But what are the steps that you think will help the government achieve that?
Morning, firstly, and I wish you all a very happy new year. I think, obviously, the total cost of logistics is a combination of two things: purchase price of logistics plus the cost of inefficiency, inventory, and so on. I think the big areas of focus and opportunity in the near to medium term really are, one, increasing the shift towards multimodal logistics. India is still very road dependent from a surface logistics perspective, and that will be a big lever of improvement. And the second one is efficiency in just documentation processes, right, and the quality of infrastructure. I think there are very specific initiatives focused on all of those, and those should give some big wins in the short term.
All right. Those, by the way, are visuals coming in from the new listing of K-Fintech. Listed with a mild premium, has turned into a bit of a discount right now, sitting with a cut of about 1%, but nothing really to write home about in terms of immediate moves. Trading at par or probably a mild premium to its other competitor, CAMS, that is. So that's the listing opening bell for K-Fin. We'll move on to the conversation with Mahindra Logistics then. Mr. Swaminathan, if you could give us a sense of how second half is likely to pan out for you, because a large chunk of your revenues come in from the Mahindra group, and even larger in that comes in from the auto space. And Sonia has been telling us, so many new launches, waiting periods are extremely high, etc. So you should be relatively insular as against others who've seen a bad festive season, right?
Yeah, so I think the first half of the year, we saw some really good revenue momentum across all our segments. I think revenue in the first half was up 32%, and on a larger base, and I think the traction continues. Obviously, automotive is leading that traction. It's really strong right now. We have good momentum both from the Mahindra and our non-Mahindra accounts. The Mahindra business is roughly half our revenue, so good momentum there. And I think our broader diversification strategy across all our markets actually supports us in our ability to deal with downturns in specific end segments. So second half, I think, is positive. I think momentum will be a bit slower than the first half, but the direction is still positive.
Right. Good morning. Thanks for joining us, Mr. Swaminathan. Prashant here. What about the non-automotive side of things? A lot of companies like, now again, it's obviously not the correct comparison, but gives you a sense, e-commerce companies, even from the unlisted space, even the listed space, players like Blue Dart, Delivery. I mean, a lot of these companies have been talking about a slowdown in business. Now, these are, of course, a lot of this is not what you do, and a lot of this is B2C as well. But at the end of the day, a slowdown there will impact what's happening on the back end, right? B2B as well. So just give us some color, non-automotive.
Yeah, sure. So I think e-com is fairly large, reasonably large segment for us. It's probably 18 to 20% of our revenues on the supply chain side. And that's one area, obviously, I think we have seen a correction there. I think demand has still been positive. It's just that I think a lot of capacity was created on the back of this first and second wave of the pandemic. And there is some course correction, obviously, from our customers in terms of those capacities adds. So, for instance, this festive, we have seen lower offtake than we expected. and our sites did see lower utilization. We also saw lower demand for flex or temp sites, which are normally a short-term reaction to demand. But overall volume still grew. So I think this is really a kind of a period correction in terms of demand. Should probably go on for a few more quarters, but by next festive, we actually expect things to kind of come back to a stronger growth path.
And e-com is 18 to 20% of your revenues. Is that what you said?
On supply chain. It's on 18 from our supply chain side.
Okay, and you're saying that this is excess capacity getting kind of, it'll take longer to, so in a way, a time correction for...
It's a time correction.
Okay.
People have just put on more, sortation, fulfillment, infrastructure, and distribution infrastructure, assuming higher growth levels, and probably the growth's been lower than what was expected, and therefore there has to be some correction in capacity.
So you're saying another 4 quarters before things kind of come back?
Yeah, probably another 2 to 3 quarters at least. One will have to see how demand turns out. But even on the outside, I think by festive next year, we should see the correction definitely going through.
Is there a slowdown in unit volume sales as well on the e-com side?
Growth has slowed down. I think I think it's not moving backwards, but growth has slowed down on unit volume sales with the companies we work with. I think value in various categories has actually gone up positively. But with the customers we work with, we have seen slowdown in volume growth.
You speak about pandemic and the excess capacities built on e-commerce there, etc., and that not sustaining now. It's purely coincidence that we just get the news that Honasa Consumer, who's of course the parent company of Mamaearth, has filed a DRHP with the regulator. So we will have another D2C sort of player coming by on the exchanges soon. But final question before we let you go, you do have a bunch of acquisitions as well. There is Meru. Just wanted to know about the turnaround out there. How's that's playing out? Do we see profits on that one? And the second one, Rivigo. You bought that. Have things been integrated out there? Do you have more sense of what synergies could look like in terms of incremental revenue and cost savings there?
Yeah, so let me just go on both of them. I think Meru is well on path. I think we have shown a significant reduction in losses since the last 6 months, since we acquired the company. And I think synergies are well on track. We have indicated that we expect the company, our mobility business totally to be EBITDA positive by the end of this financial year. And I think we pretty much expect to be on track for that. I think the Rivigo acquisition, again, is on a 3-quarter kind of integration track. I think most importantly, I think customer transitions have gone well. We've not seen any drop in volumes, right? And in terms of cost and synergy optimization, I think plans are actually in execution. Right. So we expect to be able to have that turnaround completed through the second half of next financial year. And as of now, we are on track for that.
Mr. Swaminathan, thank you so much for joining in. Wish you, the sector, a very good luck and importantly, a very happy new year as well.
Very happy new year to you as well.
Thank you for joining in. Now, time now to take a short break. Before we do that, the market's actually just holding on above that 18,000 mark. There's been a bigger decline than what was indicated at the open. And from the options side as well, we are seeing a fair amount of action, a lot of call writing above that 18,050 call. What we'll do is actually take a short break, come back, focus on the market technicals itself. Mitesh Thakkar joins in with some technical ideas.